ladies and gentlemen. I'm Joseph Novichko, Senior Trading Manager with GDM. Welcome to the final webinar of this month, and we're going to talk about another advanced binary option system. The same as yesterday, or the last session that we had, as we spoke about another binary option system. It was a 15-minute chart, preferable, with the same expiry of an option. Now, today we would be focusing on a rather smaller time frame, like 5-minute chart, 1-minute chart. I would prefer to use the 5-minute chart, as the indicators that we're using could, of course, be a little bit of lagging back on a small time frame, like the 1-minute chart. However, the fact that we can also use this particular system today, that we will have a look at in the next following minutes, also on a 15-minute chart, does not necessarily mean that we actually must use it. We can also use it on 5 and 15-minute chart and 1-minute chart as well. It's mostly focusing on the smaller time frames due to the smaller periods of our indicators. Today we're going to use 3 separate indicators, as when we talk about smaller time frames, we need an additional confirmation of a change of direction. So we need much more certainty. We need to be precise on time on all of our trades to, of course, make our profits and decrease the percentage of uncertainty, which of course brings us up to the potential 80–90% accuracy, let's put it this way. Now, the first indicator today, I will be using the Bollinger Bands as a period of 21, with, of course, a deviation of 3, as we usually use deviation of 2 in a very separate cases. In a few separate cases, we're using deviation of 3 when we need to grab larger market swings and, of course, higher, let's say, certainty. And this is how it looks on the chart. It's a tool that we've been using for a number of times. The other is the stochastic. We're going to use the presetted or the so-called default settings of the stochastic, but let's readjust it a little bit, as what we need for our main line. We will use green, red as a signal line as usual, but of course we're going to thicken out those lines so we can better see on what is happening on the chart. And of course, the final particular indicator today is the relative strength index. Just let me find it. There it is. Now, for relative strength index, given the fact that it's much faster than any other indicator so far, we're using a period of 4 as an addition to our system today, with, of course, let's readjust the periods right now. Of course, the levels is what I mean, is a level of 80 and, of course, a level of 20 for extreme conditions. And this is what we have. Now let me stretch it out a bit so we can much clearer have a look at what the charts are telling us. Now, as we've been talking so far in our sessions, ladies and gentlemen, we spoke about different systems. We spoke about different binary option systems and spot market systems, but today's session system would also be available for spot market as well. It's actually a very reliable system for spot market trading. Now, given the fact that the rules under which this system would be working on spot market will actually differ from those that are for binary options, today we're actually going to talk about the rules only for binary options. So the latest cases, scenarios, as I might say, would be focused on crossovers again and breakouts. So here I'm going to mark some breakouts and crossovers as they are. The actual focus on profit taking today would be 1 or 2 sessions, preferably we're talking about 5-minute charts. So in most of the cases, 2 sessions would be working as well as they are. Now, when we talk about breakouts, we're mostly talking about breakouts from above and below the extreme levels of our indicators. And of course, as we have multiple opportunities in which the market tells us that valid option trade is available, that doesn't really mean that we should actually comply with everything that the price action or the indicators are telling us, but mostly follow the rules under which this system performs as well as it is. Now, first of all, what we need to spot, let me zoom in a little bit so we can have a much nicer look at what the market is up to. And of course, I'm going to stretch that chart so we can better see the price action, the so-called conditions under which we are going to take our so-called positions, put or call positions. Let me choose a particular better color here. I would say I'm going to go for white. It's much nicer because it will resemble better on my foreground and of course on the indicators. Now, the first things first, what we see is the market touching the level down here when, of course, we have our extreme conditions on our stochastic indicator. Also, we have the extreme conditions in our relative strength index. That signals that an imminent change in direction is available in the next few sessions. Now, our preparation is, of course, to see a crossover. Now, let me just clean that out and spot our crossovers. Now, first of all, we have seen this candlestick marking a low, touching this lower band here as on our deviation of 3. Of course, we're catching most of the moves up to 66% of the market cases. We have our crossover here, our break off over here, and of course it's the next available candlestick in which of course this is when these cases occur and when we should actually make our call position here and exit here, or of course we can also exit on the next one here. So we have 2 available choices, either on the first session close or making it 5-minute option expiry time or 10-minute expiry time, which is of course 2 sessions here. Sometimes of course you can wait also 3 sessions as well. As we know, the 66% of the cases when those conditions are met, like this one and like this one, we are of course considering the fact that the market is actually going to shift direction for a small period of time. Now, moving to the next case scenario here, where the market had a crossover on this particular case when it was firmly down, we can see that the volatility is changing direction. One more time, I'm going to say that it's a 5-minute chart, so my drawings could start shifting back. So I'm just going to just deny this from here, and then on we're going to stick on point exactly where we should be. So we have our volatility telling us that an imminent market direction shift could happen over here, a break off over here. We can see that the next session open, we can make a call over here, exit on the next one as well. As I mentioned, it really depends on the market conditions. I would go for the first session so I can take my profit as soon as possible. On 1 minute chart, of course, you can focus on 3 or 4 or 5 different sessions. Depends on the availability on your platform. If you're trading on our platform, of course, we have smaller, significantly smaller down to 1 minute payouts on binary options, and of course, same case scenario for some other brokers. I don't really know exactly which one you are with. Now, case scenario number 3, we have this particular case with the crossover over here and the break off from the above case, which of course that's the so-called put order, which is here with a payout over here. You can see that it's a very tiny in pip size payouts, but as I mentioned earlier, we're focusing on a much more certain amount of trades rather than the majority of trading types. Of course, what I mean by rules, we only need to consider those rules which are crossovers, not like this one. This is a not valid trade. This one, of course, is a valid trade. This one is a valid trade as well as this one. Crossovers like this one we're ignoring based on the fact that most of the time the market would surprise us, and as we can see, case like this one is also not a valid trade when you actually consider your trades in the long run, when you actually make trades for a week or 3 or a month or even half a year or even a year long. You need a sustainable system to rely on. Now, even if in number of cases where you see a bounce off like this, of course, you could really catch that move, but then it really depends on the market volatility. You could actually see a very strong move back to the downside where it will press these indicators below these levels here. And of course, let me just clear that out to follow up on another case scenario here where this particular indicator here and here and here could actually suggest a potential profit, but we don't have one of our very main, let's say, very important rules where we need to touch our lower band level like this. We have the indicators below the pointed levels 20, or if it's above 80, or here 20 and 80 again. Now, the combination between these two indicators, ladies and gentlemen, is making usually a very powerful system, sustainable so-called, especially on the shorter time frames. And of course, after that crossover, we can see a call order here with a profit potential over here when you can collect your payouts. Case scenario like this one, as you can see, the crossovers here is suggesting an upward direction. Of course, an availability like this could give you a potential, a potential profit, but in the long run, you might actually get lost in these trades. But what we need to see is breaking below these levels and then bounce back above it to signal a potential change of direction. Usually the actual, let's say, best case scenarios happen on large volume. Now we are actually aiming for the Bollinger Bands to have, let's say, 66% of the cases of market conditions. So you can see strong bearish candle is touching the lower band and then reversing direction. It's actually continuing even further up, but we're not spot market traders right now. We're option traders, so we're focusing mostly on the smallest available trade in the shortest period of time, so we can collect our profits. Again, here we have a number of cases of not valid trades here, as I mentioned, this one. You can see even if the stochastic is down here, the relative strength index is so fast that it didn't even break below the aforementioned 20 area. 20 level of the stochastic, sorry, the relative strength index. Even if the stochastic is breaking below it just slightly, that doesn't necessarily mean that we have to consider the option to buy or sell, or the so-called put or call option. Same case scenario here. You can see the particular way the market is developing. You can see that this is a potentially losable trade when we don't follow the rules strictly. The Bollinger Bands are intact, lower level here. Although we have a crossover, the relative strength index didn't even get into these case scenario below level 20, and you can see the doji, and afterwards, right after, we have different direction from what the rest of the indicators are suggesting. So you see from 1, 2, 3, 4 scenarios that you could have actually won. One of it is losable, but then if we backtrack furthermore, you will see the difference when I'm talking about don't break the rules. It's very important. Let's mark some more case scenarios. You can see that crossover here. Sorry, I should have shifted that different direction like that. Here, the crossover, even if you wish, this one is suggesting upward direction, but it actually stays in one and the same price. This could be an equal trade, or even if it's just a slight pip down. Okay, we can't really track this one, it's too far behind, but my point being is that we cannot lose trades on a light head. Same case scenario here. You can see it's suggesting that it's going up. You probably could take this trade, but actually you might actually end up into a few pips behind. Same case scenario here. It's suggesting downward direction, but it's actually sticking pretty much to the sidelines. Here, however, is our preferable case. Now, what we have is our rules kept. You see the big candlesticks here, here, and here, and just right after crossovers occur, we see that our relative strength index is below the level of 20 here, then breaks above it on that particular small candlestick here, and then we can actually open trade here with 1 or 2 sessions profitable. But as we can see, the crossover occurs on this candlestick, which gives us enough time to enter our specific positions. So the amount of trades that we can get, you see this case scenario, this crossover below here, and our market was already down there on the Bollinger Bands, where the crossover occurs over here, and our option trade is on this candlestick. Now, when we talk about market certainty, just do not ignore the fact that multiple options are available, but follow the thought that I'm leading right now. So far we had roughly about 10 positions, in which 10 positions, I'm making it 10, but they could have easily been 12 or 13. I don't really count them. But the fact that since yesterday we had like 10 trades on a 5-minute time frame here. Also, none of these actually were losable trades, only if we follow the strict rules of the system, which allows us to filter out no matter where we are at these at the market chart. But if we follow the rules by you know, giving the time for the stochastic to fall below the, or just climb above levels above 80 or below 20, same case scenario for the relative strength index. Levels below 20, levels above 80, and of course before that the market should have been at the 66% Bollinger Band. Same case scenario like this one. You can see the crossovers multiple. It was actually a flat line here, but our breakoff occurs here, so our crossover becomes relevant over here, which is actually on this candlestick here, and our trade is on that session here with a profit here. So you see, when the market falls down to the Bollinger Bands, the movement is 66% exhausted, especially when during the time the market have entered into oversold conditions like here and here. Now, we don't really need any more proof that the system is valid, is available for everyone to consider trading it. Let's have another case scenario. Sorry, I forgot to erase the drawings here so we can follow back. Now we were here, so we're coming out to this condition with the market being at the Bollinger Bands with our volatility exhausted, and here, especially on this candlestick here, where it's the market trigger, we open here, just a few tiny pips are enough to take our profit with 1 or 2 sessions. Same case scenario here, you can see how the market have exhausted. We have fallen below this and this condition. The crossover occurs here on this candlestick, ladies and gentlemen, not on this one, where of course our system gives us enough time to profit from it. And of course, same case scenario when the market did not fall down here, but it did over here, and the crossover is above the 20 level, we might even get the chance to get a few pips out of this one. But as I mentioned, most of the time the market will just reverse to go even lower. It's the same scenario like this one. You can see the crossover here with the market being over here, but actually the direction is still downwards. And if you just wait a few sessions, you will get the perfect conditions in which you would book your profits immediately. Now, while we have exhausted most of our time, but let's just check a few other opportunities here. We can see that pretty much the market has been bouncing up and down between the most of the time here. You can see it didn't even break above or below these extremums. Here, however, we have the market trying for further lower. The volatility has been exhausted for quite some time. We have the market below this level, and which actually happens on this candlestick. And on the next one, we have our possibility to book another profit. You can see how in most cases we're not really aiming for a large volume candles like this one. So the correct input of periods and of course other type of data like levels and so on and so forth, we're actually taking just a very tiny small pip sizes of profits when the market is actually, let's call it, ripe to move in a certain direction. So we don't really care of what is happening 10 minutes from now. We only need to know what is happening within one session, which is 5 minutes. This is the only time we need. And so far, we didn't have even one losable trade. So even if we keep moving backwards, no matter how long, we can still suggest that in cases like this, we see that the market is quite exhausted here. It's also exhausted here. It has been touched on the Bollinger Bands on the upper band, and we can see in some case scenarios, of course, we can get a high volume candlestick. But this is really without any problem for us, because same case scenario here. Now it's rather a bearish type of movement. We see those crossovers. One more time here, both of them break below on this candlestick, as you can see. But on the next one, we are straight on for a tiny bits of size in pip size, but just about enough for our price to stay in the same direction towards which we are betting on. Same case scenario here. As you can see, both indicators were below during the period in which Bollinger Bands were here, and on this candlestick we're getting straight on forward profit, another one. Here, however, you can see a failure of this particular case where only one of the indicators were above the 80 level, the other one stays below it, and right afterwards we can lose that trade. And the crossover, of course, it did occur, but on this candlestick, which means we can't really rely on breaking the rules excessively. Same case scenario here. You can see both of them were at the same period of time below the levels here on the breakout on this candlestick. There you go, another profit. So, ladies and gentlemen, I hope that this particular system would give you some good trading ideas. I would, of course, recommend, if you have certain problems in understanding it from a webinar like this one, although I'm trying to I'm trying to stay as simple as possible, so I don't overcomplicate things. But if you need an additional time to be spent on a one-on-one session, you can always schedule one by contacting us on our website, GDMFX.com. Over there, our support department is going to be more than helpful to answer all your questions, even on the chat that will pop up immediately on the bottom right corner, or on our telephone lines. And of course, there is a third option. You can go and just send us an email at webinar@gdmfx.com. So thank you very much for joining us today in this final session for this month. Of course, from Monday you can start signing up for our new series of webinars for the month of April. And of course, until then, whatever questions you might have, you can always send it to the available contact details that I just mentioned a few seconds ago. Thank you for joining us, and of course I'm going to see you again the same time, same place next month. Thank you. See you then. Bye-bye.